Hello and welcome to Asset Informant. Dividend stocks are a great way to earn a steady stream of income from your investments, and they can be especially appealing for long-term investors who are looking for a way to generate passive income. However, with so many different stocks to choose from, it can be difficult to know which ones are the best to buy and hold forever in 2023. In this video, we'll take a closer look at some of the best dividend stocks to buy and hold forever in 2023, and explain why they are worth considering for your investment portfolio. Before we proceed, make sure you like, comment, and subscribe to stay updated on our future videos. First and foremost, it's important to understand what exactly a dividend stock is. A dividend stock is a stock that pays out a portion of its earnings to shareholders in the form of a dividend. These dividends are typically paid out on a quarterly basis, and they can be a great way to earn a steady stream of income from your investments. One of the most important things to consider when looking for dividend stocks is a company's history of paying and increasing dividends. Dividend stocks can be a great way to earn a steady stream of income from your investments, but if a company has a history of cutting or eliminating dividends, it may not be the best choice for long-term investors. Johnson & Johnson, J&J, is a great example of a company with a strong history of paying and increasing dividends. The company has been paying dividends for over 100 years and has increased its dividends for 57 consecutive years. This makes J&J a great choice for investors looking for a reliable and consistent stream of income. Johnson & Johnson, J&J, is a healthcare and consumer products conglomerate that has been operating since 1886. The company operates through three segments: pharmaceutical, medical devices, and consumer. With a market capitalization of over $395 billion, J&J is the world's largest healthcare company. Procter & Gamble Co., PG, is another company with a strong history of paying and increasing dividends. The company has been paying dividends for over 100 years and has increased its dividend for 63 consecutive years. This makes PG a great choice for investors looking for a reliable and consistent stream of income. Procter & Gamble PG is a consumer goods giant that has been in business for over 170 years. It produces some of the world's most recognizable brands, from Tide to Pantene to Gillette and more. In 2020, P&G paid a dividend of $3 per share and has a dividend yield of approximately 2.6%. This is lower than many of its peers, but is still a respectable yield for such a large and established company. Another important factor to consider when looking for dividend stocks is a company's financial stability. Dividend stocks can be a great way to earn a steady stream of income from your investments, but if a company is not financially stable, it may not be able to continue paying dividends in the long term. ExxonMobil Corp., XOM, is a great example of a financially stable company. The company is one of the largest oil and gas companies in the world and has a strong balance sheet with a large cash reserve. This makes XOM a great choice for investors looking for a financially stable company to invest in. ExxonMobil has been paying dividends since 1882 and currently has a dividend yield of 3.19%. It is also known for its ability to generate consistent cash flow due to its diversified portfolio of operations. AT&T Inc., T, is another financially stable company that is worth considering for your investment portfolio. The company is one of the largest telecommunications companies in the world and has a strong balance sheet with a large cash reserve. This makes T a great choice for investors looking for a financially stable company to invest in. AT&T has a long history of paying dividends since it was first listed on the New York Stock Exchange in 1984. The company has been paying out a regular dividend for 37 consecutive years and currently has an annual yield of 5.78%. This makes it one of the most attractive stocks for investors looking for reliable income and long-term growth potential. When looking for dividend stocks, it is also important to consider a company's growth potential. Dividend stocks can be a great way to earn a steady stream of income from your investments. But if a company does not have growth potential, its stock price may not increase in the long term. Bristol Myers Squibb Co., BMY, is a great example of a company with growth potential. The company is a leading pharmaceutical company with a strong pipeline of new drugs in development. This makes BMY a great choice for investors looking for a company with growth potential. Bristol Myers Squibb Co., BMY, is a multinational biopharmaceutical company that was founded in 1887. The company has operations in over 40 countries and specializes in drugs for the treatment of cancer, cardiovascular disease, diabetes, hepatitis, rheumatoid arthritis, and psoriasis. BMY has a dividend yield of 3.11%, a payout ratio of 34.9%, and a 5-year average dividend growth rate of 11.4%. The company has a strong pipeline of innovative therapies, including a number of immuno-oncology treatments, as well as its recently approved drug for metastatic melanoma, Opdivo. General Electric Co., GE, is another company with growth potential that is worth considering for your investment portfolio. The company is a leading conglomerate with a diverse range of businesses that are well positioned for growth in the future. This makes GE a great choice for investors looking for a company with growth potential. GE has traditionally been an industrial giant with a focus on power and energy infrastructure. However, its operations have now diversified into other areas such as aviation, healthcare, lighting, and digital solutions. The company also owns the popular NBC Universal Media Network. GE's revenue has taken a hit due to the pandemic, with 2020 revenue down 6% year over year. However, the company has managed to remain profitable during this difficult period. Furthermore, the company's balance sheets remain strong, with $72 billion in liquidity at the end of 2020. This provides a cushion for any future disruptions. When looking for dividend stocks, it's also important to consider the current dividend yield. The dividend yield is the annual dividend per share divided by the stock's current price. A higher yield generally indicates a higher return on your investment. It is also important to keep in mind that a high yield can sometimes be a red flag, indicating that the stock's price may be overvalued or that the company's dividends may be at risk. 3M Co., MMM, is a great example of a company with a solid dividend yield. The company currently has a dividend yield of 4.86%, which is higher than the average dividend yield for the S&P 500. This makes MMM a great choice for investors looking for a higher return on their investments. Coca-Cola Co., KO, is another company with a solid dividend yield that is worth considering for your investment portfolio. The company currently has a dividend yield of 2.92%, which is higher than the average dividend yield for the S&P 500. One of the most iconic brands in the world, Coca-Cola Co., KO, has been a cornerstone of the dividend investing world for decades. From an investor's perspective, Coca-Cola has exhibited impressive financial performance. Over the last 5 years, revenue has grown from $35.4 billion to $37.2 billion. The company's profitability has been resilient as well, with gross margins consistently hovering around 60%. This makes KO a great choice for investors looking for a higher return on their investments. PepsiCo Inc., PEP, is another solid choice for investors looking for a higher return on their investment. The company currently has a dividend yield of 2.9%, which is higher than the average dividend yield for the S&P 500. This makes PEP a great choice for investors looking for a higher return on their investment. Finally, Walmart Inc., WMT, is a great choice for investors looking for a solid dividend stock. The company currently has a dividend yield of 1.5%, which is lower than the average dividend yield for the S&P 500. But the company has a strong history of paying and increasing dividends and is financially stable, making it a solid choice for long-term investors. Walmart has long been a reliable dividend stock for investors, with a current dividend yield of 1.59%. Over the past 10 years, the company has increased its dividend payments from 51 cents per share to $2.24 per share. Furthermore, it's also important to keep in mind that investing in dividend stocks is not without risks. Dividend yields and payouts can fluctuate, and a company's ability to continue paying dividends in the future can be impacted by a variety of factors such as changes in the economy, interest rates, and the company's financial performance. Additionally, changes in the tax laws can also impact the value of dividends to investors. In conclusion, when looking for the best dividend stocks to buy and hold forever in 2023, it is important to consider a company's history of paying and increasing dividends, financial stability, growth potential, and current dividend yields. Some great options include Johnson & Johnson, Procter & Gamble, ExxonMobil, AT&T, Bristol-Myers Squibb, General Electric, 3M, Coca-Cola, PepsiCo, and Walmart. However, it is always important to conduct your own research and seek professional advice before making any investment decisions. Additionally, it's always important to diversify your portfolio by investing in a variety of stocks across different industries and sectors to spread risk. Hope you find this video helpful. If you have any comments, feel free to drop them in the comment section below.